Most traders believe they are following the right smart money market structure. But in reality, when the market makes a lower low, they expect a selling move from the bearish order block, but ultimately lose all their money because they are following the wrong market structure. But no need to worry. In this video, I will reveal the true smart money market structure. Using this, you can find the most accurate direction and easily catch all institutional big moves. This video will be in two parts. First, we will understand all the basics along with the institutional psychology behind them. Then, we will dive into the advanced part, where we will learn the real trading strategy, something you won't find even in paid courses. First, let's understand what is inducement. After a break of structure, the first pullback is known as inducement. Here, the market is bullish after the break of structure, and this will be our valid pullback. So, the first pullback will be considered as inducement. It looks easy? Now pause the video and tell me, which one is the valid inducement? Most traders will say, the first pullback is a valid inducement, but that's wrong. This candle lies in Inside Bar Candle, so this first valid pullback will be known as inducement. Now, we're moving into one of the most advanced concepts, and this is where most traders make mistakes. So pause the video and tell me, which is the valid inducement? Most traders will say this first pullback is the inducement, but that's wrong. When the market is bullish, we look for inducement on the left side, and in a bearish market, we look for inducement on the right side. In this case, this will be our valid pullback. So the first pullback after the break of structure is known as inducement. But if the market breaks the high, then that will become our new inducement. This is how we can accurately mark a valid inducement. If you like this premium strategy, don't forget to like and subscribe to the channel for more premium content. Now, let's understand the next powerful concept, which is weak high and strong low. First, what is a weak high? In a bullish market, a weak high is confirmed when the market breaks the IDM. And what is a strong low? In a bullish market, a strong low is confirmed when the market breaks the weak high. Let's understand this with an example. Here, this will be our valid inducement. When the market breaks the inducement, the highest point within the inducement is known as a weak high. And when the market breaks the weak high, the lowest point between the weak high and its break is known as a strong low. Now, this will be our new inducement. If the market makes a new higher high, the inducement will shift here. When the market breaks the inducement, the highest point within it is known as a weak high. And when the market breaks the weak high, the lowest point will be known as a strong low. Again, this is a new valid inducement. Our inducement shifts here because the market forms a new pullback. Once the inducement breaks, the weak high is confirmed. This is how we can mark a valid weak high and strong low. Now, let's understand another powerful concept. What is break of structure and change of character? In a bullish market, when the market breaks a weak high, it is known as a break of structure. And in a bearish market, when the market breaks a strong low, it is known as a change of character. Applying the same concepts, this is our Bos Choch. Let's understand all these concepts together. The market is bullish after a change of character, and this will be a valid inducement. If the market makes a new higher high, the inducement will shift here. Once the market breaks the inducement, the weak high is confirmed. After the weak high breaks, the break of structure and strong low are confirmed. Similarly, this is the inducement. Once the inducement breaks, the weak high is confirmed. And after the break of structure, the strong low is confirmed. After the break of structure, this becomes the new inducement. And once the inducement breaks, the weak high is confirmed again. But this time, the market directly breaks the strong low, which is known as a change of character, and the highest point will be known as a strong high. Now, after the change of character, this will be the new inducement. Once the weak low breaks, it is known as a break of structure. After the break of structure, this becomes the new inducement. When the inducement breaks, the weak low is confirmed, and once the weak low breaks, it is known as a break of structure. Again, after the break of structure, this will be a valid inducement. Here, the weak low is confirmed, and after the weak low breaks, it is known as a break of structure. This is how we can accurately mark the SMC market structure. Marking SMC market structure manually is very time-consuming, but with the advanced SMC ICT indicator, you can easily mark market structure with 100% accuracy. And that's not all, it comes with 50+ powerful features that will take your trading to the next level. Message me on Telegram to purchase this game-changing indicator. And if you buy today, you will get a 50% instant discount. Offer valid only for today. Link is in the description. Now, let's move to Advanced Level 2. First, we will understand Advanced Strategy 1. You have to identify which is the valid break of structure. Remember, for a valid break of structure, the market should close above the swing high. So, the first one will be the valid break of structure. Now, let's understand the institutional psychology behind it. Banks need buyers to execute their sell orders, and they need sellers to execute their buy orders. So the question is, where are the buyers? All the retailers who sold here have their stop losses lying above the swing. Once the market hits their stop loss, they automatically become buyers, and even more buyers are invited into the bullish breakout. And this is exactly what banks need: buyers to execute their sell orders. So, after trapping these buyers, banks place their sell huge orders. Now, most retailers are interested in buying from the extreme order block. But remember, banks need sellers to execute their buy orders. So the question is, where are the sellers? Those who buy here have their stop loss lying below the swing. Once the market hits those buyers' stop loss, they automatically become sellers, and even more sellers are invited into the bearish breakout. At this point, banks will buy huge quantities from those sellers, and the market will turn strongly bullish afterward. This is how we can trade with institutions when the market sweeps the swing high. We sell after trapping buyers and buy after trapping sellers. Now, let's understand the secret institutional psychology of the first case, when the market closes above the swing high. The strong low acts as institutional support, and in such a scenario, the market is mostly bullish from a valid order block or order flow without breaking the strong low. This is the secret psychology behind it, something most traders don't know. Now, let's understand Advanced Strategy 2. Pause this video for a moment and try to identify which is the valid break of structure. Most traders will say both are valid, and technically, that's correct. Both can be considered a break of structure. But when we apply institutional psychology, a break of structure with a strong candle is more accurate. So, the second one will be the most accurate break of structure, because the market gave a BOS with a strong green candle. That's why buying from such an order block becomes a high probability setup. Now, let's understand the secret strategy of Case 1. Here, the strength of the bullish move is less than the bearish move. The market gives a BOS with only one green candle, and the next candle forms red. Because of these two reasons, buying from this order block is a low probability setup. Here, we have two conditions. First, if the higher time frame is bullish, the market will sweep the strong low and then show the next impulsive bullish move. Second, if the higher time frame is bearish, after grabbing liquidity of the fake BOS, it will break the strong low and may show the next impulsive bearish move. This is how we can easily predict the right market direction using the higher time frame. Now, let's understand the most important concepts, the mechanical definition of SMC market structure. To get a more accurate direction, we should always use at least two time frames. For scalpers, the higher time frame will be 15 minutes, and the lower time frame will be 1 minute. Similarly, for day trader type 1, the higher time frame will be 1 hour, and the lower time frame will be 5 minutes. For day trader type 2, the time frame will be 4 hours and 15 minutes. And for swing traders, the higher time frame will be daily, and the lower time frame will be 4 hours. After BOS, the market turns bearish, so we keep selling until it mitigates the higher time frame order block or liquidity. Now, the market has already mitigated the higher time frame order block, so we can expect a trend shift. Here, a bullish shift will be confirmed after Choch. Once Choch happens, the market becomes bullish, and we keep buying until it mitigates the next higher time frame order block. Now, we can trade in multiple ways. First, IDM sweep entry setup. If the market sweeps IDM and forms SCOOB, then buying becomes a high probability setup. Second, DZAD IDM setup. The order block just after IDM is called DZAD IDM. Here, we can take either a SCOOB or ICHOCH confirmation entry. Direct entry is also valid when there is no extreme order block present. Third, DZAD EXT setup. The extreme order block between BOS and Choch is known as DZAD EXT. We can either take a direct entry or a confirmation entry from this zone. Fourth, order flow, or order block entry. Buying from order flow or order block inside the discount zone is also a strong and reliable setup. Fifth, liquidity sweep setup. Buying after a valid liquidity sweep with Scoob confirmation is another powerful setup. Here, if the market closes below IDM, then we can sell until the 15-minute bullish order block, known as a counter trend. Once the market mitigates this zone, buying becomes a high-probability setup. Bos shows the market is bullish and may continue until higher timeframe order block mitigation. If the market sweeps IDM and forms Scoob, it may show a strong bullish move. Now, the market has mitigated the higher timeframe OB, so we may expect a trend shift. So how do we confirm the market will show a real bearish shift? When the market closes below the first pullback, it is known as Bos Choch, which confirms the market is shifting bearish. After Bos Choch, the market is bearish, confirming the selling move. What should be our target? Our target should be the 4-hour POI in the discount level. In the 4-hour time frame, this is our order block in the discount zone, so we will sell until the market mitigates this zone. Now, if the market sweeps inducement and forms Scoob, then we can expect a powerful selling move. Currently, the market is bearish and has not mitigated the 4-hour order block, so we can sell from the 15-minute order block. Now, the market has mitigated the 4-hour order block. After ICOC, we can expect a bullish move in the pro trend. After ICOC, both the 4-hour and 15-minute timeframes are bullish, so buying is a high probability setup. Now, everything is bullish, and we can expect a bullish move targeting the 4-hour swing high liquidity. That's how we can use SMC market structure to identify the most accurate market direction. If you found this video helpful, make sure to like, subscribe this channel. See you in the next one.